There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to Trading Justice Podcast. My name is Matt Justice with my co-host Tim Justice, coming to you from an absolutely historic day in market, Tim. Tim, the movements we haven't seen since August of 2011 or June of 2008. But nonetheless, many of the new traders and the listeners of the Trading Justice Podcast has really never been through a moment like we saw today in the market with the movements that was just absolutely unreal. I want to get a couple thoughts from you, but first of all, just your initial thought about today.
Okay, there's a couple of things. Number one, over $1 trillion changed hands today. And you got to ask yourself, who was the beneficiary and who got hurt? Mom and pops got hurt. Individuals got hurt that didn't have a system or didn't know what to do or overreacted emotionally. Traders got hurt who had margin calls in the morning. Traders got hurt who got filled on a bad fill early in the morning. I guarantee somebody had to make that money. See, you're going to see in the news media that $1 million or $1 trillion was lost today. Not true. It changed hands, Matt. And that is a big, big difference. That's one
Absolutely.
thing. The other thing is the need for financial education. One of the things I'm so passionate about, one of the reasons why we do this podcast, why we built Tackle Trading, why we go out on the road and we take time away from our family to go out and educate people, is that we have a real crisis in this world, and especially in this country, with a lack of financial education. There are too many people who simply don't know what to do, don't know how to take action, and it is our job to try to get those people, grab them by the ears and help them understand it, because there is so much volatility that's not only happening now, but coming down the pipeline, to the upside, to the downside, you name it, and we have to be prepared for it. If you're out there and you are a listener and you got beat up because you didn't know how to take action, you got to correct that. There are so many investments we have in life that we have to be able to control the risk on, and I think that's really important as well. I got so much on my brain, Matt, though. I mean, it is a crazy day.
I want to go on a couple of the topics real quick. I was doing some math earlier today, and in the total equity value in the financial markets, just stock and options. Okay, I'm not talking commodities or currencies. Total equity value in the U.S. equities markets is about $15 trillion total. And when you I did the math, today you basically exchange hands right around $1.2 trillion. Now let's talk about a couple of the things that happened today. First of all, when all you trade is stock and options, Tim, what is one of the problems with a day like today? What did we start seeing? Liquidity. And we've been saying that liquidity is an issue. It's an issue. We've been saying for 4 years about how the Fed has taken out the liquidity of the market, and it's made the stock and the options market specifically an illiquid market because of how much money they have put into it. But when we deal with some degree of illiquid action, especially in the options market, what was happening to bid-ask spreads today? And not only on the downside, when it was going up and then back down, because if you actually look at the market today, just in terms of the Dow went down 800 points, back up 600, down 400, up 600, down 700. I mean, it was absolutely unreal, the trading action today. So up or down, what was happening to the bid-ask spreads in the marketplace?
Well, have you ever seen those videos about like Black Friday when you've got like 100, 200 people lined up at the door of like a Walmart?
Yeah.
And they have a sale that they're going to do, and there's like 5 TVs that you can get for like $100. They usually are $1,000 or whatever it is, and everybody's raring to go, and they open the door and they rush in, and it is an absolute panic moment, right? The opening of the market is kind of like that. There's only so much space, and there's only so much room, and you've got too much going on. The fact of the matter is, one of the biggest risks in market is right at the open, because you've got all of this anticipation. You've got all of these people that rush in and they want to get out. Instead of getting in, they want to get out because they're losing. On a panic day like today, and by the way, we knew all night long what was going to happen.
Oh, you knew exactly where it was going to open up. I mean, you knew like Tim. Just to go on that for a second, I was watching the markets last night when the futures market opened up and the currency market opened up 5, and it was down 1%. It wasn't even nothing big. It was just kind of a slight fade to the downside. But then as that Chinese marketplace opened up, because that's when the Australian market opens up, the Chinese marketplace doesn't open up for another few hours from then. But when the Chinese market started opening up, you started seeing this big sell-off. And so in the S&P 500, there's a futures contract called the S&P Futures Index, called /ES. That market, and it starts going down, and you go from about 1960 in the market to at the opening of the Chinese market all the way down to 1913. And then it kind of faded for the rest of the day. But then in early morning action, right around an hour before the equity market actually opens up, maybe as an hour and a half, you start seeing this huge sell-off again, all the way down to around 1870. That was a 90-point clip in the marketplace before there was even a live trade made in terms of the S&P 500. So we absolutely knew that this was going to happen. And then you have that first market reaction, and that first market reaction is to tank, and that's exactly what it did. And Tim, within literally right at the opening bell, the market literally goes down to 1831. That's within 5 to 10 minutes. So from the very top, you're down 130 points on the S&P 500, which is the account to about 7.5% to the downside. But then it starts going right back up. And it's like, what's going on here? What's going on here? And it was just so volatile, it was tough to get a read on it. Were you surprised that, not that it came down today, and because we knew it was coming down today, but after the opening bell, about 15 minutes into the market had literally already went back up about 70 to 80 points. Was that surprising to you?
Yes, that was probably the most surprising part of the day, is to see the snapback rally as aggressive as you did. But Matt, I have lived through this before. Many of my traders have not. I've seen it. I remember 2008 and 9, and I remember days just like today. Now, they were not as big as this. I have to point that out. We were talking like in 2008 and 9, you'd be down 400 points on the Dow, then come back to 200 or 100, then you'd sell off again. Well, I was not surprised.
Let's do a comparison
when it went back down.
Okay, let's do a quick comparison real quick. The S&P 500 on the breakdown today on the daily chart, okay, it went about 7.5% on the down. It ended up down over 5%. Okay, so let's just take it from yesterday's close, Friday's close to today's close. You're down about 5.5 points, right? 5.5%. Well, on the breakdown that we had in October, November of 2007, you went from 1523 down to 1483. That was the breakdown then. And that was only, I mean, you're talking only, what is that, about 40 points? And today we're talking 140 points. I mean, that was on the breakdown of the S&P 500. And then in the summer of that year, when it got really, really, really ugly coming into the summer and the fall, you're talking 2% down days. You're talking a big day was 2.5%, a little bit of whipsaw impact. And that's in October of 2007. It was just absolutely, utterly crazy to see the price movements that we saw today, because we just don't see it very often. And even if you fast forward to 2011, right, and you're talking about that market clip in 2011, that I remember that market clip in 2011 really, really well. And you're absolutely right. It would be a 400-point down day in the Dow, which is akin to, at that point, probably about 3%. And then it would go snap right back up the next day. But rarely did we see the intraday action that we saw today, where it goes down 7.5 and goes right back up to, I mean, it got down less than 1% today at one point in the S&P 500. The NASDAQ almost broke even today before the late day sell-off down to the 5.5% that it did. I personally have not seen of a movement to the downside back to the upside in such a short amount of time within the intraday price action. I was really surprised by that. And one of the problems is because we trade everything, but we trade a lot of options. And and I'll tell you, the biggest criminal thing that happened today was the brokers. I don't know. They can call it technical difficulties. They can talk about their servers all day they want, but they made it during that snapback action in the marketplace. They made it almost impossible to make trades in terms of the bid-ask spreads, but also the speed of the markets. Their technology was so slow that then all of a sudden after the snapback, everything works just fine. I'm not buying that there was not something going on in the stock and the options market that made it fairly difficult to trade in that environment. It was a very difficult day to trade in, but at the end of the day, it was also a fairly good day if you were a bear.
The only day I can even compare this to would be May 6th of 2010, and there was a flash crash that day. And I don't know if you remember that day. You probably do. I know you do. We were down, but it was very, very different in some regards. But in terms of the actual movement, at one point the ES contract was down 120 points, 8-9%. But in that day, Matt, it was a computer failure because one of the banks I think it was in Europe, I believe it was a French bank. Don't quote me on that. I'll have to go back and look at that. But I think they defaulted. They had a problem. They got some real problems with their computer program going in their automated trading, and it flash crashed the market.
Yeah.
But that happened at noon. That was out of nowhere. This one was anticipation all night long, and then you gap, and then you have margin calls from over the weekend. You have options assignment from last week. I guarantee there were a lot of institutions that basically lost a lot of money.
I agree with that, and I do remember that day. That was the flash crash we saw, and it was a high frequency glitch. And we're looking at it on the screen here where it snapped right back, and that was 10%. There was certainly high frequency involved today, and the one thing, but this was not a high frequency driven moment. It was more of an economic moment that had price action built in over the weekend. You can't tell me the brokers weren't prepared for that. You can't tell me that the brokers didn't know this was going to happen, and all of a sudden at the opening bell they make it impossible to actually trade in. It's criminal in my.
Well, I think so as well. I wonder, because, and this is, here's a good question. I wonder if there were certain brokers that performed really well and certain that didn't. I wonder if your mom and pop shops didn't do great, but the international brokers like IB did. I would love to see performance numbers on that this morning.
Yeah. I'll ask Keith King that because the most of the brokers that I'm aware of had performance issues for the first hour of the trading day. I know Thinkorswim did, as they're owned by a traditional TD Ameritrade. Options House did. Options Express did. I'm sure the Fidelities of the world did. But your international brokers, like your interactive brokers, I haven't heard. I'll send an email to Keith to see, because he trades at IB primarily, how their performance was. But I'm looking at this, and this is not a flash crash. This is a crash. There's no other ways about that. And and it's not just today. It was Friday. It was Thursday of last week as well. And it's going to be interesting to see where that market goes. But you're talking $1.2 trillion that exchange hands, Tim. And I guarantee there's some traders on Wall Street that are, having a very, very nice steak dinner tonight at the expense of a lot of mom and pa's out there. But at the same time, Tim, you know what? We know these crashes happen, and people have a responsibility to educate themselves. And I mean, this isn't 1999 when getting information and speed of technology was difficult. It's not 1987 where Ma and Pa didn't have access to the financial, to Wall Street and financial trading. This is 2015. The information is there. The technicals are there. Everything is there. And consumers in America have a responsibility to educate themselves. And Tim, you and I go around this country teaching other people how to do this. And there's been so many situations in the past where I've dealt with people with money where like literally maybe they have $100, $500, or $1 million in their retirement accounts, where they'd be like, yeah, it looks fine, but you know what, I'm happy with my financial advisor. I'm happy with my wealth manager. And you know what, oh, your classes and your education, that's a little too pricey for me. You know what's really pricey? Days like today. That's really pricey for those individuals because they're all long mutual funds, long stock. I just wonder how the IBD stocks did today. I mean, those growth-based stocks, I really do wonder that. I haven't checked that out, but I've dealt with a lot of IBD buyers over the course of the last, 6 months because I teach a lot of the IBD crowd, and sometimes they're difficult to actually accept any education. Here's one of their stocks in the last month. It went from $130 to $87. I mean, that's a 35% crash already. People have to educate themselves, and they have to understand how these markets perform and how they react, because and I said today to a few people that the people that had success today in trading, and there was a lot of people that had great success over at Tackle Trade, Tim. I've seen a lot of comments how this was their best day trading ever because they were short the market going into it, because they put themselves in a position to be successful. They decided to move forward with their financial education 6 months ago, 3 months ago, a year ago, and they put themselves in a position from a trading perspective, from an educational perspective, from a team perspective, to take advantage of a very, very big down day in the market today. I mean, and another thing, Tim, we've talked recently, like people have been constantly complaining about low volatility, right? Well, ladies and gentlemen, you can't complain any longer because the volatility index.
Be careful what you wish for.
Exactly. Because the volatility index went up 45% today, and yet last week it moved up 130%. Its biggest one-day movement in a week. It went up again 45% just today in terms of the volatility of the market. And what we've always known, because we've been trading for a very long time, is that volatility, when it decides to spike, it spikes very, very, very quickly. I mean, just a call option today, Tim, in a November call option on the volatility index is about literally $20 on put options. $20 on put options. God almighty, that is absolutely insane how expensive the option markets get when volatility starts spiking. So it's important for people to invest in themselves, and it's important for people to educate themselves. I want to go through a couple.
I want to read something to you. Hold on. I want to read something to you.
Go ahead.
Because you had mentioned the tackle trading forums over in the Clubhouse. I want to read this from Paul Seward. He wrote this today. Actually, yesterday at 2:28 p.m. I wonder how he's feeling today because of this position. He says, I want to thank Matt for his sage advice to buy insurance for your portfolio. Last Monday, I set up a trade on a protective put on the S&P. The trade was to go through if the S&P dropped below support at 2040. I also did the same with the reverse 3X ETF on the S&P. Well, you know what happened last week. The timing couldn't have been better. I am making money and not losing it. These trades were done as I cannot short stock in my IRA. I also bought an inverse ETF for oil a few weeks ago, and it has been doing nicely.
Tim, that means a lot. It does. It goes to show you that what we do matters, and the time, the effort, the blood, sweat, and tears that we do, it matters. And I've been telling people to protect themselves for 6 months now. Every week I'm out on the road, I talk about the protective put option. I talk about insurance. I talk about, controlling risk. I've done videos almost monthly over there at Tackle. You guys need to protect yourself. You need to protect yourself. And what I've always told people is, you can't wait to when the market's already getting spanked to add the insurance. Number one, you're too late. Number two, it becomes much more difficult to trade in that environment. And number three, the cost goes up tremendously. I mean, if you're looking at, say, just the S&P 500. So let's just look at the spiders here. If you would have added insurance, Tim, if you would have added insurance to your portfolio, a month ago, you would have been paying about half as much for insurance as you're paying today, which means you would have doubled your return already, protecting your entire retirement account. And I don't post it. I post a lot at Tackle. I post a lot at our Facebook pages, and I post a lot on Twitter and I do all those videos. But you know what? I very rarely post on my personal Facebook page because I just don't want to deal with, you know, just people and whatnot in that capacity. You know, Facebook's really for just to post pictures of your amazing kids, right?
Well,
And
no, interesting. Our uncle, John, got on Facebook yesterday or Saturday. It was new Facebook. And he only has like 5, 6 friends. I was one of his first friends. And he posted, he said, "My life is about the scriptures, my cat CJ, and my family." And I said, "John, you're going to do well on Facebook."
yes, yes, that's you're going to do fantastic. As long as you can start bitching about all things Democrats and Obama, you're going to fit right in there in Emory County, Utah, John. But you know, I made a post today, and I decided to put it on Facebook because people need to become aware, and if they do not put the time in right now to become aware, become educated, start learning, start investing in yourself instead of just spending all your hard-earned money on the random shit you don't need, you're going to get everything taken from you. And all I said is, I don't post much on Facebook regarding the financial markets, however, but yada, yada, yada. You have significant risk. And I did a video called Fight or Flight, Consumers' Ignorance. And you know what, Tim? Even if that just reaches one person, and that reaches one person to take control of their life, I am good with that. You know, I have you know him, Bobby Shannon. He's been on the podcast 3 times now. Bobby was an economic theorist and a wine producer. He owns a vineyard. A year ago when I met Bobby, and Bobby started trading just like a month ago. He's been learning. He's been sitting in our trainings, and Tim, he literally killed the market the last week. I remember we were talking at an event. And I said, "Yeah, Bobby, I'm going to short the IWM." And he says, "Well, if you're going to do it, I'm going to do it." And he actually bought more contracts than I did, and he absolutely killed it today. And you know, he made a comment. He said, "Thanks for everything. We made a lot of money today as a result of your guidance." You know, and I called up Bobby and I said, "Bobby, dinner's on you this week." He said, "Oh, no doubt, no doubt." You know, it's because dinner's always on me, right? When we're out there.
Pretty well, except when I'm there, and then you pwn it on me.
One time.
No,
That's rookie hazing. That's what that is. That is rookie hazing.
We'll have to confirm. Yeah.
But anyways, you know, it's important to start doing things the right way, and you know, there's you know, like Theodore Roosevelt said this. He said, in all circumstances, the best thing you can do is the right thing. The worst thing you can do, the second best thing you can do is the wrong thing, and the absolute worst thing you can do is do nothing. And that saying really reminds me of the consumers in America today. For a very, very, very long time, not the last 5 years, Tim, for the last 30 years, consumers have continually given their economic and financial freedom to Wall Street, and Wall Street has taken advantage of it. And those same consumers, that reminds me of what Theodore Roosevelt said, the best thing you can do is the right thing. Well, they didn't do that. The second best thing you can do is the wrong thing, and guess what? They didn't do that as well. And the worst thing a consumer can do is nothing. That's what they did, and they took it in the shorts today because of their complacency, because of their lack of action. And if you're listening to this podcast and you get offended at that, you should be offended at that. And I hope it drives you to the point where you actually do something about it, because it's not too late. 2-3 day down day in the market, Tim, that's not too late. This market's going to be around for a very long time, Tackle trading is going to be around for a very long time. You know, you and I are going to be around for a very long time. It's time to take advantage of it starting right now. And I want to look at some of the foreign markets here in terms of the sell-off, Tim. Okay, just what we saw just in terms of just today in the market. The Chinese market down 6% today. The Japanese market down 3.5% today, and these are the ETFs in our markets. Their markets are actually much worse. The Brazilian market ETF the Brazilian market has already crashed in the last 7-8 months from 55 down to currently 24, including a 4.5% drop today. The Vanguard International Equity Index, which is all the top companies in the world, down 4% today. You had the emerging market indexes down 4.5% today. You had the European markets down 3% today. You had the German markets, which might be one of the markets we want to look to because it was only down 1.5 today. And then you had the Greek markets down another 6.8% today. These things.
Well, with Europe though, you have to remember they closed when the U.S. markets were at a high.
It'll price in later tonight.
Right.
It'll price in later tonight. But even some of the biggest names in the world, Tim, Disney already down 3.5% underneath its 200-day moving average. It is off already $27 off its high in the last 3 weeks. Apple, everybody loves Apple. Apple can never go down. Down 2.5% today. Should have been down 13%, but Tim Cook sent an email. Did you hear about this with Apple? Tim Cook, the CEO of Apple, when the bloodbath started this morning, sent an email to Jim Cramer of Mad Money, CNBC fame, saying that they're not worried. Apple's got great valuations. Apple's pricing in China is really good, and things look absolutely amazing. Before he sent that email, it was down 13% today, Tim. Today. It ended up only being down 2.5%. But off its highs, already $32 or close to 25%, Apple has gone down in the last month alone. I mean, this was a broad-based index.
I got to jump in on this one, okay?
Go ahead.
If you don't think that the media is an arm of institutions, including Wall Street and companies, you are a fool. If you turn CNBC on to get your financial news, then you are also a fool. I have no problem with their media skills in terms of keeping people glued to the screen. Guys, I have not watched CNBC in like 8 or 9 years. It is a joke. It is not worth your time. You should not turn the TV on to try to understand markets. You should do your own work, period. End of sentence. I have a lot to rant about, but it's pretty simple.
I absolutely 100% agree, Tim. If you're using CNBC as a way to get your financial knowledge, you deserve today. That's what you deserved. And you have deserved the last month, and you deserve to get your ass kicked financially and maybe even physically over the next year, okay? Because if you got punched in the face every day over the next year, you would do less damage to your long-term stability than if you listen to CNBC. It's absolutely appalling how many people listen to these traditionalists on CNBC and Bloomberg and Reuters and all these long-term buy and hold type craziness. And it's shocking that the financial situation in the United States is as porous as it is. It's shocking that the average 401k before the last month had $78,000 in it. After the last month, it has $70,000 in it. That's the average 55 and above. The average 401k in America, Tim, $18,000 before this bloodbath. They're now down to $16,000 on average. You have to start doing something differently. It hasn't worked for you in the past. It's not going to work for you in the future. And for all you IBD lovers out there, and yes, you know who you are, when the market went down in 2008, 2009, S&P 500 went down 48%, Tim. IBD stocks, 68% on average. On average, there were 5 or 6 of IBD stocks that went to penny stocks. The IBD stocks in the last month have been utterly crushed. And yet, well, that's all I need, right? No, you need something better. You need something better. And on a day like today, okay, guess what one of the only 2 stocks that went up was? GMCR. And guess who just happened to be short GMCR today? I did. The only stock, think about that for a second. The only stock, one of the only 2 stocks in the entire marketplace that actually went up today was GMCR. That is amazing. But here. Okay, I want to walk you through something. I tried to get out of GMCR at 7:45 this morning when it was down 5%. I tried to get out of GMCR at 8 o'clock, 8:30, 9 o'clock, 9:30, 9. I tried to get out of it, literally adjusting my price to get out probably 15 times today. until I finally got out. Okay, and I still made money because I'd been short GMSR for a while, but until it got like literally 1% up on the day, and I'm just like, oh my God, one of the most frustrating things I've ever had to deal with in my trading career was trying to get out of GMCR today. Man, talk about sometimes bad luck. But I wanted to get
Can
your
we
Go
can we get a little philosophical for a second?
Sure.
You okay with that?
Yeah, of
Because
course.
to me, Matt, everything we're talking about, by the way, good pick on GMCR. Good thing you had about 800 other trades on, but good pick on that one.
Thank you.
You got to take it. You got to take it.
Yeah.
All right. But anyway, we're sitting here, we're ranting, and I'm thinking, and we're talking about perspective. We're talking about education. We're talking about all of it. Anybody who listens to our podcast, Matt, probably is already well aware of the financial realities out there in the marketplace.
Yeah.
They're already well aware. They have become informed, at least to the fact that they are now consciously incompetent, or they're consciously competent, or they're unconsciously competent. Those are different phases of learning. If you're an expert and you just love our podcast, great. Keep listening. We love you. If you're pretty good and you know what you're doing and you're making money, great. But if you happen to be in that category where you're aware of what you need to get good at, but you haven't built the skill yet, Matt, what advice would you give those people?
You're aware, but you don't have you don't have the skill. Is that what we're talking about?
Mm-hmm.
Keep at it. I mean, I remember I guess I just always go back to my first bear market. My first bear market was 07, 08, 09. And even though we had been trading for a year and a half, we were still new to it. We'd never seen a bear market before. We'd never seen the volatility of the bear markets before. And that bear market had nothing. I mean, the beginnings of it, as we just talked about, had really nothing even remotely close to the volatility that we saw today in the market. But for a lot of people, Tim, this isn't going to be their only bear market. This is going to be a marketplace. We're going to have a lot of bear markets in our future. And if this is your first bear market, then yeah, you need a team. That's why you have us over there at Tackle. That's why we do our scouting reports. And, my force report last week was up 1,400 pips, Tim. You have been short commodities in your commodity report for the last 2 months. It's Gino has been posting his options report. Noah's been posting his stock report. We're professionals. We're professionals at what we do. We understand these price movements. But the only reason we do is because we went through it in 07, 08, 09. We went through the quick one in 2011. We went through the flash crash in May of 2010. And so we have that experience. But the only reason we have that experience is because we've lived through them. We've had them in the marketplace, and so you got to go through them to get the experience. But just think about it, Tim. Where do you think you and I would be if we had tackle trading back in 2008? You know what I mean? We would have done so much better with the community, but we didn't have that. We had us. That we had our first just trying to figure it out on our own to a certain extent. Now we have this community. So what the suggestions, the advice I'd give them. Make tackle a part of your daily routine. Practice. And if you're not comfortable, you still trade, but you just trade in a virtual environment. Get that experience. See the movements. Because the only way you're going to get to where you are, Noah or Gino, is to go out there and do it every day. And if you think you don't have time, then you're always going to be poor. If you think you're too busy, then you're probably really efficient with with the other aspects of your life. Today's price movement, I said this earlier, today's price movement, the people who took advantage of it were the people who had spent the time and the money on themselves to educate themselves. And you know what? There's a lot of people out there that cheapen this, and they'll go to YouTube and they'll try to figure out how to trade from YouTube. I'll bet you those guys got their asses kicked today trying to figure out the market from YouTube. And we post our videos on YouTube as well. But we also know that you cannot go through this alone. You can't learn from YouTube or a website. You really got to invest in yourself. You have to. You have to invest in your knowledge. And I go back to what Warren Buffett said. Back in the day, he said, you know what? The Fed can print all the money in the world. They can go into debt to the highest degrees. They can be inefficient in every capacity. The dollar can be worth far less. But if you have invested in yourself, then you have a terrific asset. And step one is always investment in one's self. And we do it all the time. From a weight loss perspective, people spend $10 billion every single year on weight loss, Tim. Seriously, on weight loss. And guess what? And here's a stat: 95%. 95% failure rate for weight loss companies. 95. But yet consumers will spend $10 billion every single year on a 5% success rate. But yet when you ask those same consumers to invest in financial knowledge, they're like, oh man, that's expensive. Well, we have a little bit higher success rate than 5%, guys. Invest in yourself, invest in team. Today is the start of something. Friday, Thursday was the start of something. It's not the end. We got to continue to build. We got to continue to improve, and we just got to do it together. At the end of the day, we just got to do it together.
Well, thank you for that. I agree with it 100%. I mean, you have to commit. If you're aware that you need education and you're not there yet, stay committed. It takes time. Matt, I recently got an email from a student, and I didn't ask him for permission, so I won't drop his name, but I know that you know who he is. I'll tell you off the podcast. And he started trading in 2010. He took all of our classes. He took 2 mentorships with me. He was a fantastic student. His wife also trades with him. They're retired. He used to work at IBM. And for years he did okay, but nothing great. Little bit here, little bit there, nothing out of the ballpark, He sent me an email. I hadn't heard from him in about 6 months. And he sent me an email last week, actually. He said, Tim, I finally got it. 9 months in a row, profitable. My system. He used the word system so many times. I knew he got it. He said, my system is down pat. I've got all the rules. I've got the design. I understand the option Greeks. I understand what to do, when to do it, and how to do it. For me, it took a lot longer than I had hoped because it took him about 4 years, Matt. But it was worth it for him. I've had students who get right off the turnip truck and they start trading right away in their first month. But for some people, it might take longer. Here's the question. Once you know that you have to have this knowledge, who cares how much time it takes? What are you going to do? Just avoid the reality of the situation? If it takes you 2 years, it takes you 2 years. If you do it with mentors, you're going to get there faster. If you don't do it with mentors, you probably won't get there at all. So keep working hard. That would be my advice to everybody out there. It's all about what's next. It's not about looking backwards and crying over spilled milk. If you did lose money in the markets, go forward and try to fix it and take advantage of the next condition. Get better, get a system down, and make sure that you're under control.
I agree. I mean, I find it really hard for people to do this by themselves in a marketplace in 2015 that is dominated by computer algorithms, that is dominated by Wall Street. And these entities on Wall Street, they're designed to make money. Yeah. You have to learn what we do, how we do it, and you know what? It doesn't come overnight. It doesn't. It doesn't mean you can't start making money, especially if you have our reports, right? But it doesn't mean you can't learn long term. What I always say to people is, guys, I'm never going to ask you to give me 3 days of your time at one of my events. Give me a year. Give these 3 days as a way to start the learning process, to start seeing what is available to you, to start learning. But you're never going to master something in 3 days. You can do that in a year. You can do that in 2 years. And even if it takes a year, Tim, to perfect something, but you have financial knowledge for the rest of your life, I mean, my God, that is powerful. And so many times in today's age, people get so caught up in the what can you do for me right now? Okay? We get so caught up in that we don't realize that this is a journey. Life's a journey. Every aspect of life is a journey. I mean, just in terms of understanding everything in life, the things that were important to us 10 years ago aren't necessarily important to us today. Embrace the journey, have it for the rest of your life. Because the one thing that financial knowledge has given you and I is the ability to take advantage of price movement, the ability to live wonderful, fulfilled lives financially, but it's also given us the ability to give this back to other people, because that's something we do believe in to our core, is to serve, and to serve from a financial perspective. And it goes back to that, that proverb that Uncle John would really love if he ever listened to the podcast. You got to teach a man to fish. You don't give him fish.
Yeah, I agree.
Right?
I agree. Very powerful. You guys have been listening to the Trading Justice podcast. Matt and Tim here to help you understand Black Monday, market crash, definitely a lot of craziness out there. I know that, we were there the whole day, all day, glued to the screen, all night last night. One thing, if you're out there and you're listening to the podcast, if you do enjoy the podcast, go to iTunes and give us a review. That will help us, get the word out a little bit more for the podcast. If you're a Tackle Trading member, get in the Clubhouse and participate there. And Matt, we're on Twitter. I know that you're tweeting a storm up today. What's your Twitter handle?
Oh, yeah. I was out of Matt Justice 13. I had some nasty things to say about TD Ameritrade, but I had a lot of other things talking about out there. I love Twitter, Tim. Twitter is a way where you could quickly communicate with the masses, with your followers, with your students, to exchange ideas and so on and so forth. But yeah, Matt Justice 13 at Twitter.
Yeah, you can also find us on TuneIn, on Stitcher, on YouTube. We're all over the place, anywhere that you enjoy content. You can get us on tackletrading.com or tradingjustice.com to stream the podcast if you want to use it that way. And as always, if you think somebody can benefit, share it with your friend. Put it out there on social media. Absolutely. And let's get this thing growing. Matt, thank you for the conversation. I know you got a ball game tonight to go to. Got to do a little.
Tanyan.
Yeah.
Tanyan. Yes, that's right. Tanyan was 3 for 3 last week with a couple ribbies. Really improving. Looking forward to watching him kick some Harriman ass today. So, Tanyan, you want to say hi to the podcast? There's my little son. He is going to be a trader. He's not the next Warren Buffett. He's probably the next Carl Icahn. but no. Tanya would be in terms of personality, Tanya would definitely be the next Warren Buffett. Laid back, kind of smooth like that. My little 6-year-old kitty cat, Katira, she's the next Carl Icahn. Very cutthroat.
Soros.
Very cutthroat she is. Okay, I take it back. Tanyan's Warren Buffett. Moo is going to be Carl Icahn. I got to get someone for Tegan. I'm not there yet with her. And Kat is the next George Soros. That's right.
I like it. Yeah. That's funny. All right, Matt. Thanks for the conversation.
Real quick. One last thing. The Forex report, which is usually only for pro members, I am posting it to everybody this time. So check it out. I do not have any new trades reported this week. But we do have some killer ongoing trades, including ongoing on the euro dollar long, both against the Australian dollar and the U.S. dollar against the CAD, kicking ass on those, showing those commodity currencies.
Right.
Thanks,
Very
everybody.
Cool. All right. Peace out.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.